Good afternoon. First, I'd like to take this opportunity to thank Hubert Danso and the Africa Investor community for having us here today, not only NASP, but our delegation. So as Barbara said, my name is Donna Sims-Wilson, and I'm president of Smith Graham, which is a $6 billion African-American-owned investment management firm in its 27th year of operations. But more importantly for this panel, I'm privileged to serve as the chair-elect of the National Association of Securities Professionals, or NASP for short. My colleague Orem Graves already told you a little bit about NASP, but I want to just take a minute and drill down a little further. NASP is a U.S.-based organization of over 600 members, minorities and women, in 10 chapters throughout the country who work in the securities and investment industry. Our members include investment bankers, asset managers, pension fund consultants, and many asset owners, including public and corporate pension funds, foundations, and endowments. Our member firms include BlackRock, Goldman Sachs, Citigroup, Prudential Insurance, now called PGIM, GAMCO, as well as minority-owned investment management and investment banking firms such as Progress Asset Management, the Williams Capital Group, FIS Group, and Blaylock Robert Vann, to name a few. The asset owners who are regular participants at our conferences both at the local and national level include CalPERS, the New York City Retirement Funds, LACERA, Los Angeles County Employee Retirement Association, Chicago Teachers, and the Atlanta Pension Funds, to name a few more. And today we are a delegation 32 strong from the U.S. of institutional investors here to look at infrastructure opportunities on the continent of Africa. Now, as part of our delegation from the U.S., we have two large municipal debt issuers, the City of Atlanta in the personage of the CFO, and the Deputy Treasurer of the City of Philadelphia. Each of these cities issues hundreds of millions of dollars, dare I say billions of dollars, of municipal debt annually, and as a matter of fact, the municipal debt market in the United States is the largest and most active in the world, and is how we finance our infrastructure. Now, to set the stage broadly regarding municipal debt on the African continent, simply I can say that it is a relatively new area that is ripe with opportunity. South Africa has been issuing municipal debt since the early 2000s. 8 of their metros or cities have the capability to issue municipal debt, while 4 of the largest metros issue debt regularly. They issue exclusively general obligation debt, although the debt is issued for revenue-type projects. In the U.S., for example, we would issue revenue bonds to finance power, water, transportation, toll roads, etc. To date, South Africa is the only country in sub-Saharan Africa that has issued municipal debt. The city of Dakar came very close to issuing a bond to fund a regional shopping center, but it was canceled at the last minute due to concerns that the national government could be liable if the city of Dakar defaulted. So why do African cities have trouble accessing municipal bond markets? There are several reasons. One, revenue collection is centralized at the national government, so cities must rely on remittances from their national governments. The timing and amount of these payments vary depending upon the economic situation or the politics of the moment. So cities can't control or predict their own revenues from year to year. Also, financial management needs to improve. Many cities lack long-term strategic plans, solid budgeting and record-keeping necessary to properly administer debt service on municipal bonds. Now, the good news is that DFIs, the U.S. government, and private foundations have intervened in cities such as Nairobi and Dakar to assist in capacity building for municipal administration to issue municipal debt. And now, with that stage set, let's hear from my distinguished panel. Okay. I'm not trying to start a fight up here or anything, but Anthony, would you agree with his point of view as it relates to growth and many of the things he discussed?
No, absolutely. I think what Conrad, I mean, everything that you've said impacts probably on business confidence, right? Because even if nothing else changes in the numbers, and the business confidence factor is affected because of this reshuffle, you would find a worsening outcome on growth. And so we were, and we've always been at pains to explain to investors, both internationally and in South Africa, but it's almost as if international investors understand or are still holding on to our assets because they are looking at a global picture and they are saying things are in fact not this bad, so bad for South Africa, as opposed to South African investors. But the policies of government has not changed, you see, and that's the important point. So there's a lot of debate. So as Conrad says, it's on the debate, and because of the debate, but the debate is not the policy, and that's the difference. I want to separate the debate from the policy, because there's a lot of debate, and South Africa is a very politically charged nation. And so there are a lot of discussions that go on. There's a policy conference coming up now in June, and so you have now the advisor who's speaking in his personal capacity, advisor to the Minister of Finance, and making statements. But that is interpreted now as these are the kinds of policies that may come into being. But at this point, those kinds of debates have always happened in the past, and it has never become nationalization of the mines and nationalization of the banks and all these things have never become policy since '94. And so there's always been this consistency of policy. I just want to make this, so it's very important that when that we separate the rhetoric, and this 2017 we've always known will be a highly rhetoric, if that's the term, year of politics, and therefore that has created uncertainty. And so we got to separate the fundamental picture. We believe that we have turned the corner last year in terms of growth, the lowest level of growth of 0.4%, and that our projection, and that's the general consensus, even in speaking to the IMF, is that the growth trajectory over the medium term is a higher growth on an annual basis, increasingly up. So we're on a growing, upward growth trajectory going into the medium term.
And South Africa isn't alone in this regard. I mean, in my own country, we've had a reshuffle at the top, if you will. And some of the things that have happened have brought into question the impact on our economy. And so I agree with you. One must separate the rhetoric from the actual fundamentals of what is happening in the economy. And with that, I'd like to open it up to questions from the floor. Does anybody have any questions? Okay. Well, hearing none, then please join me in thanking. Oh, wait, is there a question in the back there?
Chair?
Raise your hand, please.
Chair, if you give me a minute, I have some information which I might want to share in the context of local municipalities. Just as some information.
Okay, absolutely. Please. Please, go ahead.
Okay, thank you.
Go ahead and share.
Now, we got sidetracked a little bit with the South African downgrade, and I just want to make good on that. And given that the panel was very much also around local governments and local government funding, and I thought it might be interesting for the audience. We recently published a global local and regional government debt forecast for 2017 and 2018. We looked at, around the globe, we looked at 36 countries, excluding the US, because you include the US, the numbers go through the roof. No? So we looked at important 36 countries. And in terms of borrowing needs, what we are seeing in that survey for 2017 is a total of 1.6 trillion US. Borrowing needs out of 36 key countries in the world as far as LRGs, local regional governments, are concerned. We expected to trail off a bit to 1 trillion in 2018, and the issuance of 1.6 trillion this year, expected issuance, takes the debt stock of municipalities, local regional governments around the world up to 7.2 trillion. Now, if you're interested, and I don't want to bore you with too many numbers and statistics here, When you look at the 1 trillion we are forecasting to be issued in 2018, 40% of that 1 trillion would come out of China, from Chinese local governments. You would have then the likes of Germany and Japan, the runners-up in terms of issuing debt for local regional governments. Interestingly enough, sort of like for emerging markets, there are some countries that have actually large funding requirements or issuance plans. We are putting Brazil down with 16 billion US. We are putting Russia down with 21 billion US. And we have smaller emerging market countries like Mexico at close to 5 billion. Central Eastern European countries, 4.7, also close to 5. Argentina, close to 10 billion. What does not appear on this radar screen really would be Africa. In the global context, what we are seeing from a regional local government issuance perspective, Africa is really still a third, fourth tier market. Notwithstanding sort of the good news we had from South Africa, where we have the big metros actually issuing, but mindful of the fact what's been said in McKinsey reports and in other reports, and the World Bank has done studies accordingly, Africa is a continent that is in the process of urbanization. And that urbanization requires investment. That requires investment in infrastructure, in housing, in sewage, in water, in electricity, and whatnot. Some of these numbers over time, in particular, if we continue seeing the shift in Africa towards urbanization, Africa should sort of pop up in these numbers more prominently than what we are seeing today. Those were just the numbers I wanted to share with you.
Yes, thank you very much. And please join me in is there time for a question? I was told that we need to. I saw a hand go up. No? One question. Okay. Yes, sir. Right here.
I'm hoping I'm asking this question to the other right panel. Coming from the U.S., right, sort of, I get taxed on every level of government, right, just for breathing. How does the revenue model work in Africa at the city, state, country level? How does that work? How does the government receive its revenue from its citizens? And what participation, on a percentage basis, is it for the citizens?
Anthony, you want to answer that for South Africa?
For South Africa, we raise most of the revenues at a national level. So the whole budget that we have, that we present once a year, the expenditure, which is 90% of it is from the taxes, and 10% would be what we fund through borrowing. But all of that expenditure goes mostly to the national government and to provincial governments, because provincial governments don't have financing or revenue sources. The metros, the local governments, they raise 90% of their own revenue and get 10% of their revenues from the national government, because they have rates and taxes, property, etc. So they generate their own revenues, and this is why the big metros are also able to issue bonds. But at the national level, it's just the government that issues bonds to fund both national and provincial government.
And from a rating agency perspective, having own source revenues like the metros is something we appreciate. Yeah.
Yeah.
Yeah. A quick comment.
Okay.
I think the same applies for Kenya, where any bond the government issues can be applied to the sub-national level as well. Most of our bonds, half of it is bought by domestic entities, about half is foreign. So the half which is foreign, that's where you can invest in. And now with the new mobile-based government security, that is now global, meaning that can scale now globally, and my finance minister can now borrow across the world anytime he wants.
Okay, well, please join me in thanking the panel today.
Yeah.
Doing business in Africa, you can't afford to be without Africa Investor.